Hello, everybody. Welcome to problem 23-3. This is standard costing from Wiley. It's my Wiley solution walkthrough of my accounting tools for business decision making. Textbook authors are Paul Kimmel, Jerry Weingan, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of myself and not the authors of the text or Wiley. Okay. Before we say thank you, let's do the problem. All right. So, Red Clothiers, okay, is a small company that manufactures tall men's suits. Company has used a standard cost accounting system. In May 2025, 11,250 suits were produced. The following standard and actual cost data apply to the month of May, when normal capacity was 14,000 direct labor hours. When the normal capacity, all materials purchased were used. Okay, so it's asking us to do the total price, quantity, and quantity variances for materials and labor. So let's go ahead and do that. So for direct materials, and I'll bring down my friends, which are right over here. So as we go through and we see if we have various different, as we're going through, if you see something that says favorable or U or F, that's what it means. It's favorable or unfavorable. So let's go ahead and for direct materials. Okay, so this is going to be my actual quantity times the actual price. Comparing this over here to my standard quantity times my standard price. Okay, so I want to compare these two because this is going to tell me what my total variance is. So how much did I actually go through? So again, AQ times AP minus SQ times SP. So my actual quantity over here for direct materials, my actual was 90,500 yards for a total of 375,575. So what is my middle value? Well, what did I have to multiply 90,500 by to get to 375,575? I'm going to get $4.15 per yard. Okay, so how did this number come about, right? So this is going to be 375,575 divided by 90,500 is equal to the $4.15. Okay. Right, so over here, my standard quantity is going to be 8 yards now. So how many suits did I go through and make? Well, it's going to be 11,250, which is my quantity times 8. So this is going to be 11,250 units times 8 yards per unit. So my total standard quantity is going to be 90,000. And the cost per unit is going to be $4.40 per yard. So over here, the total amount I should have paid for the suits is going to be $396,000. So my total direct materials variance is going to be favorable. Why is it favorable? Because I spent less than I actually should have. So this is my total direct materials variance favorable. Now I'm going to put the man in the middle, right over here, AQ, SP. Okay, so right over here, 90,500, 440. Get 398,200. Okay, so why do I do this? Because when I look at where my variance is coming from, it's actually not all in one direction, not like the band. So right over here, I paid less per square yard than I had budgeted, but I used more than I had actually budgeted for at that particular quantity. So over here, to get down to the individual ones, actual quantity times the actual price minus the standard quantity times the standard price. So this is going to be, no, this is, so my To go through and isolate this, the first thing I'm going to do is I'm going to do my price variance, which is going to be AQ times AP minus AQ times SP. And this is going to be a favorable direct materials price variance. When I do this value, the quantity is remaining constant, so I'm focused on the price. Below here, I'm going to compare the middle value, or AQ times SP, to my standard, or SQ times SP. When I'm doing this, my standard price is being left constant, so I'm now focused on the quantity. So this over here is going to be 398.2, 2200. This is going to be an unfavorable direct materials quantity variance, right? I used a little bit more than I should have. And that's where I'm getting to my total variance. I have to add these two up. If I don't, it's not good. Okay, direct labor. Direct labor, I'm going to my actual hours times my actual rate. I'm going to compare this to my standard hours times my standard rate. So over here, my actual hours was 14,250 for a total of 200,925. Or over here, this is going to be 1410. Again, we want to check our work. 14,250. Whoa. Hold on, this should be 1410, 14,250. This should equal 200,925. Interesting. Okay, so right over here, I'm comparing this to what I should have spent. So the amount I should have gone through and spent is, it basically says 1.2 hours at $13.40 per hour. So I made 11,250 units at 1.2 hours per unit. So this is going to be 11,250 times 1.2, or 13,500. This is going to be at 13,400. I mean $13.40. Or this is going to give me 180,900. Okay, so my total direct labor variance is my actual hours times my actual rate times my standard hours times my standard rate. So this is going to be 200,925, 180,900. This amount here we know is going to be unfavorable. I spent $20,000 more on my direct labor than I should have. Okay. So, and it's going to be a bad variance in each direction. Why? I spent $14.10 an hour. I should have only spent $13.40. I spent 14,250 hours. I should have only used 13.5. Okay, so this is my total direct labor variance. Okay. Okay, so now I'm going to put the value in the middle, which is AH times SR. When I multiply these values through, I'm going to get 190,950. So I compare what I actually spent to the value in the middle. This is going to give me my direct labor rate / price variance. When I take my middle value, AH times SR less SH times SR, this is going to give me over here 10,050. This is my direct labor efficiency, because that's why we talk about it in the number of hours, or the quantity of hours variance. Okay, so what do I have to do? And both of these are going to be unfavorable. The total variance is also unfavorable. Remember, I spent more than I should have. Okay. So when I add these two up, it equals my total amount of my variance. Okay. Now, so over here, the last part I have to go through and do is to go ahead and look at my actual overhead. And again, if you're watching this video, this is the third one that I'm doing this for. If you're taking my class, you will not see a question like this worded this way on your exam. So over here, what we have happening is we're going to have our total fixed overhead is going to be at, my actual was 49,000 plus 37,000. So my total actual overhead is going to be 49,000 plus 37,000. The 49,000 is my fixed factory overhead plus the 37,000 variable factory overhead. Okay, so that's my total factory overhead that I actually went through and spent. The next thing I'm going to go ahead and do is to figure out, well, what was my overhead in terms of, how much should I have gone through and spent? So right over here, I'm just going to pause this real quick. Okay, so this is what I actually spent on my total factory overhead. In terms of what I should have spent on my overhead, is it's saying here that it's applied on the basis of direct labor hours. So if I produced units of 11,250 and my direct labor hours per unit is going to be at 1.2, right? So 1.2 hours. So my total direct labor hours is going to be 13,500. My overhead rate combined for both fixed and variable is $6.10 per hour. When I multiply this through, I get 82,350. This is going to be my total fixed budget, or my total standard fixed factory overhead plus variable factory overhead. Okay, so if I spent 86 and I should have only spent 82,350, this is going to be an unfavorable total overhead variance. And again, I'm going to show you in just a moment, or I will be posting a video using Becker CPA review. I have videos that are like this in my other videos, but I'm going to use Becker just because it's more fun and it can kind of essentially justify why I'm teaching you the way I am. That's really what we're going to be looking for. Okay. So in any event, thanks to Wiley again for allowing me to use their materials. I greatly appreciate it. And please don't forget to like and subscribe. If you'd like to see any other solutions, please feel free to ask for them in the comments. And I'll see you on the next video. Have a great day.